Good morning, investors and traders. This is Naeem Aslam, Chief Market Analyst at Avatrade, and welcome to our daily technical analysis video. What we're looking at today is on sterling and, of course, the effect of the current ongoing discussion about Brexit. So let's see the price action and then see where are those opportunities. Now, before we continue, as always, it is important for me to go through this disclaimer. Anything which will be discussed cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, what we're going to do is we're going to go on to the sterling dollar time on the weekly time frame, and what we're going to see from here is where the price is trading now. Number one, the first thing that we got to pay attention to is that on the weekly time frame, the price formed a bearish pattern. Now, what is that bearish pattern? Let me point that out a little bit so that it becomes a bit more clear. So this is your first top right over here, and this is your second top. Of course, the price didn't really go to the exact levels, but the price formed. Whenever a double top like the one that it forms, like over here, it forms, that means that the prices are more likely to reverse from these price levels. And reverse to their price levels to what level? Usually it means that the price can perhaps do at least 30% retracement in terms of a Fibonacci, or even some bit more. So we can easily see that the 30% level is already achieved, but the price can continue its move towards this critical level of 1.30, which actually is a very much support or a consolidation on a shorter term time frame. If we go into the shorter term time frame, it will show us that this is where the consolidation happened. So it is very safe to say that this price, which has already retraced more than 30%, can slightly it can do a bit more, and it can go all the way to 1.3047. Of course, the full pattern is, if you wanted to see that how the full pattern is and how much the big move could be, so that pattern is like this is the full pattern. So okay, the price can come all the way to here, back towards this basis, but right now, as discussed, more than 30% is pretty much retraced. The price can go all the way to 1.30. In my humble opinion, I believe that the prices can easily retrace to 1.30 for currently. Remember, previously we did discuss that price will continue its journey from its current price level, like where it is, and then it can easily go to the upside, and it can touch, when the prices were trading over here, we did say that the prices can go all the way to 1.30, and then this is what really happened. Now, of course, the prices are retracing from their highs as expected because of a Brexit vows, because people are believing, or traders or speculators or rumors are in the market that there will be no deal as with respect to Brexit, which is a huge concern for investors and traders. So this is very, very important on your weekly time frame. But let's shift the focus from weekly time frame to a bit more a bit more active time frame, such as your daily time frame. Now, on the daily time frame, what we see is the three important moving averages. This is your 50, this is your 100, this is your 200 moving average. When we look at the RSI has started to move away from its level of 70, which represents, by the way, overbought, meaning any time the price kind of comes over here, this could be an opportunity to sell. Of course, today we are seeing this massive sell-off, and if the price comes near 1.3153, which is where the 50-day simple moving average is trading, and which is where, by the way, the previous rally also happened. Let me show you on the chart what I mean by that. So if we do it right over here, so we can see that the price started to move initially from this particular price point, right? So that is also the area where the price, the last time it was here, is also in line with our 200-day simple moving average, because this yellow one or orange one is our 200-day simple moving average. When it happened, when the price came to when the price was here the last time, we can clearly tell there was a massive big rally. Now the price is falling clearly to the downside, but we are still a little bit shy from reaching from these price levels. So if we come into this area of support, which runs slightly below the 1.32145, but just above the 1.3153, that would be a very, very good entry. But for those investors and for those traders who like to become a little bit more aggressive, they can go onto 4-hour time frame. And when they go into 4-hour time frame, they should be really looking at these two potential areas where they can really add into their positions. So number one, the area was, which is right over here. This is your prime area number one, right? Because the price just touched the top of this one, as you can see. So because what I did was I looked at the wick of this candle, and then this pretty much gave me clarification that the price had a massive boost. Of course, the area before that was over here, because this is another area which gave the price a massive boost and it got tested before. But because the price tested this area quite deep into this area of support or area of buy, obviously this time when the price came, we saw this massive sell-off. But this area is the first time that the price is really coming to. It did go into this area just a little bit above that. So this was an opportunity. Not really now. That the next opportunity would only be if the price breaks above the 100-day simple moving average on your 4-hour time frame. But otherwise, I think things and any retracement in sterling remains a positive act. I think it's a very positive outcome only if UK leaves the EU with the deal, which is very likely to happen the last hour, the last minute, and the last second. That's all for today. See you guys next time.